Yo, yo, yo. Sorry to turn my mic on. I was like, what the heck? What's going on? What's up, Eric? What's up, Sandollar? What's up, Deuce? I'll give it a few minutes to give people a chance of joining, and then we'll go over some stuff. But I'm going to go over Spy. We're going to go over where the levels come from. We're going to go over what to look out for this upcoming week. Then we're going to go to the smaller time frame. Basically, we're going to do a weekly scenarios video, but in a stream. And then if we want at the end, we can do a couple tickers, rechart them, or just look at them for a few moments. What's up, Jordan? What's up, Shane? Hey, no problem, man. AirPods work too. Make sure you get them Beats AirPods, man. Those things are sick. What's up, Charlie? What's up, Julian? Oh, I forgot I can't play this playlist. Whoops. Haha, I knew that. Yeah, how's the music? Is it loud, quiet? I know it just changed songs, so it was a bad time to ask, but... this is a really bad song to test that on. There we go. It's getting like all quiet songs. What's up, Chuck? What's up, Teresa? I'm so glad this many of you made it, really. Since I didn't really set a time or anything. I didn't want to set a time Friday or Saturday and then not be there on that time, be there later. So I wanted to just kind of pop up and then give you guys 30-40 minutes to join. But looks like we got a good turnout, so I'm happy with that. And if people don't watch it live, whatever, they can go back and watch it as a recording. We're not going to do a 4-hour stream, so it shouldn't be impossible for someone to go back and review. But basically, we're going to do a weekly scenarios video all in a stream. A little different than that, but close to it. And y'all get to watch me rechart the sectors, because I have to rechart those. I deleted them all last night. I was like, you know what? I'll just save this for tomorrow night. I think I did chart XLK. Oh, no, maybe I deleted it. Yeah, all these need to be charted. So we'll do the top 5 sectors of the S&P 500, and then we'll do that kind of in the middle. Right now we're focused on SPY bigger time frame. We're gonna go to SPY smaller time frame. We'll talk about some stuff. I'll talk about economic report this week, earnings, and then we'll jump into the charting sectors. And then if you guys want to do a couple tickers at the end, we'll do that. I'm gonna give it a couple more minutes just to give people a chance, just maybe 2-3 more minutes. So bear with me if you're already here. What's up, Jacob? But how was y'all's weekend? Let me know how y'all. From last week, again, when I ask that, I'm more asking, how are you in terms of, from trading last week going into this weekend, how did you refresh? Did you sit here and chart all weekend? Because that's a no-no. I know you should be hungry, you should want to grind, you should want to review this stuff, but you shouldn't be looking at this stuff 24/7. That's going to burn you out, whether you like it or not. So just deal with that. That's reality. But I hope a lot of you guys got a good refresher yesterday, and hopefully today you're getting warmed up again on the charts, just kind of looking at stuff, getting kind of conditioned for the week. But let me know, how was y'all's weekend? Streaming reckless. Yeah, let me know. Alright, I think I'm gonna start in like half minute or so, and then we'll go ahead and jump into it. Be sure to drop a like on the stream. Also, wave hello. Let us know you're here. Yesterday was lots of fun, and today I'd be chilling at Starbucks. What's up, Sonia? Glad to see you. Glad to see everybody. And thank you guys again for popping up here on short notice, really. Alright, nobody answered me, but is the music too quiet or is it too loud? Is it perfect? Because this is normally the volume I have it set up, but I've seen people say this is too loud. What's up, Bob? How you doing, man? Do you know what days you'll be streaming next week? Yes, I'll be streaming Monday, Wednesday, and Friday. Tuesday and Thursday, you should catch one of my friends streaming in the Discord for the Discord members. And then you guys can catch that. But yeah, Monday, Wednesday, Friday, that's what I'm aiming for. Last couple weeks, I just haven't really felt like streaming, I'll be honest with you. I can give you some bullshit excuse, but I'm not going to do that to you. I just haven't felt like streaming. And a lot of the days that I didn't stream too, honestly wasn't that exciting of a market. There were good moves, good plays, and I was very heavily active and very engaged in the Discord when I wasn't streaming. So if you weren't on the YouTube streams, there was still a ton of free action happening on the trade floor. That's where I was posting the majority of it. But yeah, just kind of been chilling in there. Music is kind of loud. Thank you for answering me. I've been waiting for someone to say it. I thought it was, but I wanted to make sure. Thank you. Yeah, this song is a little bit better of an example to go off of. I need to find a better playlist for music this tonight, honestly. I'm not going to play this one tomorrow. Okay, cool. That's what I thought. I just want to make sure about y'all. Alright, good. Alright, so let's jump into this now. So SPY bigger time frame. Who all knows where we get these levels? Who doesn't? I'm going to jump into it either way. So bigger time frame analysis. This comes from the monthly time frame. Here, I'm just going to honestly create a new drawing set for YouTube stream Sunday. So our levels pretty much all come from the monthly time frame when we're looking at bigger time frame analysis. So we have a pretty set system. We get our levels, we leave them there forever. We don't really have to mess with them anymore. There are some recent time frame levels that we mess with here and there, but a majority of our price action comes from the monthly or the weekly when we're looking at the daily time frame. And then when we're trading on the smaller time frames, whatever time frame you like, 1, 5, 20, 3, 2, 15 minute, I don't care what it is, the smaller time frames, a lot of those levels come from the daily time frame. So just to kind of give you that breakdown, if you don't know what that is, please check out workshop number 11 and you'll get a really good insight on what we're looking at here. But we also uploaded some good bigger time frame routine videos here recently, so if you wanted to check those out. Whoops. By the way, if you don't feel like right clicking a level and then clicking remove, you can control Z the last 10 actions that you put on your screen. But you can't move away from that screen. You can't change, away from the screen or anything. If you leave, it remembers that and it won't let you go back and control Z. So again, a lot of our levels come from the monthly time frame. That's how we get a lot of our levels, from that bigger time frame. Sometimes you can see we have a couple extra levels. That's where we get our in-between candles. These are the control points of the emerging candles. These are just halfway points. It's just extra levels that we can use. We don't do them for every single range. You can see right now I just have it for current where price is close to. And then we go to the weekly. And this is where you can kind of have an optional opinion on how you want to draw your supply and demand. You can draw it from the far left. You can go from the first, I call them eaves and dips when I tell my chat to give them a better kind of insight on what to look for. But the eaves and the dips, when you see price push up, slow down, bam. Right here, you're looking for the high of that move to the open of the last green candle before this reversal happened. By doing that, you're now drawing an area of supply where, regardless of how long this stays under, if it can get above this, retest this, hold it, this is where you're looking for solid 80% entries for a good retest. This can be used for any time frame, and it's just good analysis anyway, regardless of taking an entry or not. And then the dips, so those are the eaves, the dips, going from the low of that move to the top of the last red candle before the reversal back up, and this creates an area of supply. I don't know what I'm doing here. There we go. From the low of that move to the top of the last red candle before the reversal to create an area of demand. Again, so if we can see this area pull back, and regardless of whatever fib you want to draw, this is where a lot of really good initial higher lows are going to be made, and then looking to go test that recent high. So a lot of good trades can be made from there as well. But that's where, again, where we get a lot of our supply and demand, our eaves, our dips, to give us these highlighted areas, which you can see I didn't do it on this time frame here. I was doing this on the daily to kind of give people better insight for the for the daily time frame. But a lot of our charts that we like to do, like if I go to like literally any chart here, you can do PayPal, Twilio, Deer, like shop. Let's do shop. Go to the weekly. If you go to the far left here, this is the traditional system. So if you want to do it where you're doing the eaves and dips from the far left, be my guest. This is a really good way. You can leave these here and pretty much never touch them again. You could just leave them there, and then a lot of your analysis is going to be on the daily time frame. And then you can see on my SPY chart, A lot of them are from the daily, some of them are from the weekly. You know, this is just decent variations you can do. Again, you're just looking for the strongest eves and dips to give yourself set levels of supply and demand, and then you don't ever have to touch them again. And then a couple of these extra areas that I have set are a gap fill, a gap fill, a gap fill. This is not a gap fill. This is another area of supply that I drew from recent price action. I just added the bigger time frame level that was here from the monthly. So I saw this level. I wanted to include it. I saw the open of the last green candle before the drop down. So I wanted to include that. So now I know, okay, well, that's a pretty strong level to look out for moving forward. So basically, that's how we get our levels. But moving forward this week, we need to see, does 441.91 hold? Or I'll even write this up. Does 441.91 to 445.04 range hold this week? So basically we're looking for this area to hold. So that could mean we're getting a lower open tomorrow. We're going to probably test this. We could get a higher open, hold this area of support, build up to here, then build back down. You know, there's a lot of different scenarios that could possibly happen in front of us, but we know that buyers have control as long as 441.91 up to 445.04 have control. They can hold this, bulls are in control. So looking for them to try and hold this at the open on Monday. If they can, this is a very good sign that buyers want to give us a buyer reaction back up to resistance again, where we'll see again over the, whether it takes a week, 2 weeks, 3 weeks, it doesn't matter. We'll see if they can retake 450 to 451.50, where they lost control before. This is where buyers had control before, and then they gap down with another bearish kicker. In the Discord, we talked about a bearish kicker, a bearish engulfing, a third bearish candle popping up, breaking that 451, 450 range, and then moving us lower back down towards here. We also got multiple retests to help us down lower with lower highs. So very good sign for the bears. What bulls need to do is see, can they hold this area, build us back up to resistance, and retake this over whether it's this week, next week, it doesn't matter, but that is where they're going to at least head towards if we have a bullish week this week. So you can definitely expect a 4 or 5, maybe even $6 move from here. But if we end up losing this area of support, 445.04, look for not just that level, but for the previous day low and previous day open to break. These can be good extra levels for an extra confirmation down towards 441.91, and then if that breaks, we can look for further confirmation down towards lower 440, maybe even the higher 430s. So that's what we'll be looking at for on the bigger time frame, both for upside and for downside. Now we're going to go on to the smaller time frames for SPY. We'll go over how we get these levels as well. But just to give you a display quick of what we're looking at going into the week. Basically, and again, I don't know how tomorrow's going to open. I have no idea. So I'm not going to give you that information. What I am going to give you are different scenarios and what's possible regardless of how we open. So we're going to go over if we open higher, if we open in this range, if we open lower, what to look for from where, right? So again, all these levels come from the daily time frame. Like I said at the very beginning of the stream, these are called emerging candles. We add halfway points, we add supply and demand from the previous day or recent price action. If we see a recent day's supply or demand not break, we just leave it there until we do see it tested again. And you can see I've already added my levels. I send these out every single day after the market closes. I update my chart and I send it out to the chat so everybody has it for the next day, and they can kind of go back and really chart it on their own and see if they can get the same levels as me or similar levels, which is okay. So let's go to the other chart. I'll show you how we get the levels, and then we will move on to what to look out for. So the emerging candles that are drawn for the default chart here, again, this is all drawn on the daily, and they're meant for the smaller time frames, regardless of what you traded on, the 1, the 5, the 5, the 2, the 3, the 15, the 10, the 20, the 30, whatever you'd like to trade on the smaller time frames. That's what we use these for. So I'm about to show you where we get these from. All right, so let's jump into the emerging candles in the daily routine. So you jump over here to the far left, just like a book, guys. Remember, like a book, you read left to right, up to down. This is exactly what we're going to do here. We're going to start to the far left. So I see current prices at 445.65, but I'm not going to start right next to it. I'm going to start a little bit underneath it. So let's start at like, I don't know, let's start like on this breakout here. All right, so we're grabbing the top of that green candle, the close of it, the meat of the bone. That's what I call it, the emerging candle. It's essentially seen as a stopping point for this candle here, right? And that might not mean nothing right here, but in the future it does mean something. And so what we trade off of is price history. When you're going off of my system, when you're going off the BB system, the TA routine, whatever you want to call it, your system, you guys have earned it. It's price history. You're trading price action with price history. That's all you're trading. You're trading what big money trades. Big money is looking at price history. Yes, they use EMAs. Yes, they use historical data, all that good stuff. But so are you by using these exact levels. So that is why they have so much power to them whenever you see them played in the markets. Some of them hold the support. Some of them are rejected from. Some of them are faked out and then retested from. You know, there's just so many possibilities with these levels. They're so pivotal. You know, they're so heavily used that it's almost like the market has no choice but to react to them every time. So be happy that you have a system that is powerful enough to give you the opportunity every day, every other day, every week. It's all due to price history. All right, so we're going to stop there. We got from 428 all the way up to 466. There are a couple spots I saw where we could add halfway points, but I didn't see any that were around current. Oh, wait, I'm blind. You could add one right here, but I still think I'm going to leave that just because I know that we have so many levels in the smaller time frame levels because we've been range trading a lot lately. So let's go down to that 5-day, 5-minute. We've got everything from the bigger time frames that we wanted. What I was saying with the halfway points, if anybody doesn't know what I'm talking about, is that on the bigger time frame, if you go from one emerging candle to the next with a fib, you grab your price level tool, you jump down to the 50% here, you actually are grabbing a very solid level because you're just grabbing a halfway point between two very strong levels. So, I mean, it's just logically, it's a good level. And as you can see, it was actually the low of Friday, so pretty cool. But we're not going to leave that there. I'm going to remove that. I didn't want to add that. I'm going to be consistent with my rule. So now we're going to go to the previous day, and we're just going to focus on that for a second. So where was the high of day made? About right here. And we see we have a level pretty close, right? We have a couple levels pretty close, actually. So what I'm going to do is I'm going to include these levels because they're just so close, right? So I'm going to go from here, and I see the reversal point of that day happen from right here. So where's the open of that last green candle? Way down here. So we're going to grab that. And I know that's pretty freaking large. But so what? Some days are going to be really tiny ranges and you're going to be happy about it. It's going to look really good. Some days are going to be large and you're just going to have to accept it. But if you want to keep it minimal, you can go from just the high of the day down to that open of that green candle. But you do have to realize there are levels really close by. So if you are going to draw that, you have to understand they're right there. So I'm going to include those. Let's add our previous day. We don't have to add the close. We don't have to add the open because we're about to draw an area there. So low of day. Go from there. Where's the top of the last red candle before the reversal back up? Right here. So we're going to include that. And awesome, it includes the that day's open. So that's awesome because normally we grab the today's high, the previous day high, previous day low, previous day open, previous day close, but all of them are pretty much covered by levels. Also, when you're looking at this, you might be like, "Damn, everything is like so jam-packed. Everything's so close. This looks really ugly." Yeah, that's the point. That's exactly what happened though. You know, we didn't get much movement like we did on Thursday. Look what happened Friday. We just kind of held under a resistance, hit it, got over it, couldn't hold it, broke under it, couldn't get a good move away from it. So what does that tell you about Friday? That it didn't really matter. Friday's price action really didn't matter. It really didn't do much, regardless of how much volume, regardless of what it gave you on the smaller time frame. None of this mattered. It might matter on the bigger time frame, like we were speaking, but as you can see, though, a very weird, indecisive day, though, right? So that's okay. So what can we expect moving into tomorrow? Whoops. Let me zoom this out. We'll make this a little easier to look at. All right, sorry. I was waking my dog up. She's like snoring. So moving into tomorrow's market, what can we look for? We can look for moves outside of the previous day high supply or under the previous day demand. So we're going to be looking for moves outside of the 443.30s or the previous day demand. What is another idea you could do? Let's say this is just way too much info for you. You don't like that there's this much info. And this isn't going to be like this every single day. So what can we do? Oh, I'm on that right chart. Good. I don't have to adjust anything. We can go add that bigger time frame price action that we were going over. Whoops, I'll just go to this one. Remember what we just said. What did we just say on here, everybody? What did we need to watch? We need to see, does 445 hold as support? And if so, then bulls should take it control up until 448, maybe 450, maybe 450, 150. That was the area that we truly talked about, 450 to 450, 150. Or do we look for a break under 443.35 or 443.97? So if we want to give ourselves a minimal game plan, We can just focus on what we just talked about. What needs to be broken? Damn, that looks weird. Let's extend those. That needs to be broken. What needs to be held as support? 445. If this breaks, you can look for shorts down to here. If this breaks, you can look for further shorts down to here and further levels that like we talked about. What can we look for upside? A hold of 445.04 or a break over that previous day high, that previous day supply. So do you have to add that candle? Do you have to add those levels up there? No, but you need to know that they're there. So you know that you have, go to this one again. You know that you have 447.26, 446.97 right above your head. If these break, it's home free up until 449, 450.25, 450 150s like we just talked about from the bigger time frame. So you see how a lot of your smaller time frame price action, a lot of the levels do actually line up with what I'm talking about on this time frame. If anything, it's increasing your game plan. So this is why you have to look at both with that system. So I hope this helps some of you guys out. Before we move on to charting the sectors real quick, and then we're going to jump into just kind of whatever. We could chart Qs after, maybe a couple different tickers. But I wanted to talk about this for the most part because time frame continuity is insanely important. I probably still said that wrong, but it is very, very important to be able to break down what's happening on the bigger down to the smaller, and then using both of those charts again to kind of give you a better game plan for what's possibly ahead of us. So let me type up some of that. If so, look over 446. What was it? 446.97 to 447.20 something. Yeah, 26. Almost at 25. 449, 450 to 451.50s. Low previous day low slash previous day open. Towards. What was it on the bigger time frame? 441.90. What was it on smaller? Whoops. 441.70. So we'll say 442. 442. 41. Pretty much every dollar. Let's not be greedy here. Yeah, 440 is right there, and then under 440 is where it really starts dropping. I think on the bigger time frame, though, it's 438. So we're gonna say 430. 750, and then bam, that's already our initial game plan. It's not even just SPY bigger time frame, it's SPY everything. But does that make sense though? Before I move on to these sectors, I'm going to move on to the sectors right after this. What's up, D-Touch? Glad to see you, man. And yeah, sorry guys I wasn't reading the chat. I was honestly just trying to go hard so I could get my points across as fast as possible. I know how hard it is to somehow rewatch these sometimes hour, 4 hour, 10 hour long streams. Before I move on though, give me a thumbs up or give me some sort of reaction so I see that you understand before we move on. I see Sonia gets it. I just saw what you said, Shane. I had to hydrate after that one. But again, guys, just to reiterate this point yet again, I want you to remember this. Not every day is it going to look pretty. You know, right now, honestly, this looks like shit, in my opinion. I don't like that everything's so close quarters. I don't like that everything's so jam-packed. But not every day is it going to be loose and ready to explode. You know, it's not going to be, you know, whatever. In the morning, we could gap up to right here, and then the game plan becomes so much more simpler. It's like, all right, well, you look for a hold of this or a break of that. You know, that essentially tells you who has control. That's it. So at that point, you're looking for base builds to hold over, retest to hold over, good bullish candlesticks to pop up. If not, we break under, then you're looking for any kind of buy reaction to pop up to try and catch a lead test back to the downside because you know that an important crucial area is breaking. But just understand that not every day is it going to look good. On those days where it doesn't look good, what can we go off of? We can trade light, we can mental trade more that day, maybe just take 1 or 2 trades and then go back to mental trading. You know, we don't have to go crazy that day. We can wait for those better looking days to pop up, right? And on the bigger time frames, let's think logically. What's happening? They're fighting to see who can hold support, right? I mean, they just technically broke it with the lower open, but they retook it Friday. That's a very, very strong sign that buyers have a chance of trying to move back up to support. So tomorrow really does matter. The next couple of days really do matter to see, do they continue holding not just this level here, but where they dropped to when they did break that support. So we have a couple things to go off of. So it's not really that bad, but it's just going to be a little indecisive because we're basically witnessing an exchange of power. Who's going to take control? Who's going to continue to hold control? Bears already took control. They produced 3 signals up top. They broke support on the third. Bears have been in control since basically this candle popped up and have really just been picking up into their positions since here. This is really where they started confirming to the open market to everybody, hey, we're trying to move lower. And now what you're trying to see is, can they break lower, or are they trying to hold this as a short-term support? All right, so let's move on to the XL, or to the sectors. Y'all are good on SPY. Y'all have heard me talk enough on SPY. All right, so I've had a ton of people in the streams ask me, how do I chart these? And I've gone over them a few times in the streams themselves, but I'm going to do it here for this one so we can all be on the same page. So you can see I have no other set charts on any of them. It's just the default chart. I don't have any extra charts on these. I just leave these because I don't like to chart these too much. I just like to leave them there and then never touch them because I don't like to touch the sector charts. The only thing you'll ever see me touch or adjust are those intraday levels, those previous day supplies, where it's like, okay, this is where they reversed from, this is where the open of that this is the supply of that day. If it holds over this, retest over, this is going to be super bullish. If they show rejection here, it can be very bad for them, and we'll see the test of the Friday's lows made. And then demand, going from the low of the move to the top of the last red candle to show me where demand is. Sometimes adding that day's open, sometimes adding that day's close, and these are really, really strong pivot points in between that supply, that demand, that can be very, very useful. And you can see this is jam-packed. That's because it was jam-packed. Friday didn't really have a good range. It was just stuck there. So that's how I get a lot of my smaller time frame levels, is like you saw me do on my SPY chart. But where the rest of those levels come from are all from the monthly. I go to the monthly just like I like to do on the bigger time frame for SPY. I'm starting from the right. I'm already breaking my own rule. That one's barely an emergent candle. And you can see we have pretty much oh, nope, that one. Have pretty much everything we need from this move up, so we can just move on. And this is where you can go to grab more weekly supply and demand if you want. You don't have to. I personally don't. I just leave the levels here, and then I do the intraday supply and demand, so I can just kind of update it every day, give myself something else to practice through. And what I tell I don't have mentorship students, but what I tell all of my one-on-ones, what I tell all the people that I like to help with a little bit more when I'm working with someone a little bit closer, more in depth, I always tell them, draw those monthly levels and then focus on grabbing that previous day low demand, that previous day high supply. That's going to be all you need. You're not always going to have these levels to smack around. And if you want to go to the monthly time frame and add in between levels, be my guest. We can draw these here right now just for practice. Grab your fib, go from emerging candle to the next, grab your price level tool, go down here to the 50%, draw a line over it. It doesn't have to be perfect. Whoops, there we go. Draw another one. Draw another one on the orange line. Again, you're not really making up a level here. You're going off of information you already have. You're just grabbing essentially the halfway point of that information, which is just something good passive to do. And I have a video coming out this week that'll give you another good kind of insight on why this is important, especially when you're looking at gaps. Everyone's always like, what's a more passive way to trade gap fills, and what's a way to better trade this? I have a great example to go over this week, so I can't wait to do that. So be on the lookout for that as well. 50% though, again, I'm just going from one emerging candle to the next, throwing my fib on to give myself a halfway point. It's not really using fibs, I'm just lazily trying to get the halfway point of that range. And that can be everything you need now. Oops, didn't mean to do that. There we go. And now we can add that previous day low. This is where they reversed from. So we go to the top of that last red candle. We have the area of demand drawn out. Area of supply drawn out. So now we are ready for next week, or for Monday and a little couple days forward with the XLK chart. Go to the healthcare chart. Also, before I move on, just for vague information, you guys need to understand that SPY is a big pie. Inside that pie are sectors. You can see you have tech, healthcare, banks, discretionary, comms, and these are the main 5 that I always look at. You also have industrial, staples, energies, utilities, materials, real estate, and of course the unrelated, unrelative, uncategorized sector. But we have tech, which is XLK, You can see they're about 27% of the market. What's the largest slices of the pie inside of XLK? Again, SPY is a big pie. Inside that pie, you have slices. These are the slices. And inside these slices, they have their own little slices, their own ingredients. What are the ingredients of tech? Apple, Microsoft, NVIDIA. These are the main three. You can see these are the main three that have any weight, really, on the entire tech sector. So when you hear people say tech, they're not talking about Tesla. They're not talking about Amazon. If you hear someone say that, they're probably vaguely just mentioning them because they are a part of the QQQ sector, which is considered tech. But this is the actual tech sector. Apple, Microsoft, NVIDIA. AMD is also in here, but you can see they are not even close to NVIDIA, Microsoft, Apple in terms of weight. They're not even 0.5%. So make sure you understand that. And then, of course, what's the other slices of pie inside of SPY? SPY pie. Healthcare, financials, discretionary, comms. What are the ingredients in those? In healthcare, you have UNH, J&J, Eli Lilly, Merck, AbbVie. In the banks, you have Berkshire and JPM. These are the main two that I watch. Discretionary, you guys know me. I'm always watching Amazon and Tesla. We always mention what are the other tickers inside of here. Home Depot, McDonald's, Nike, and there's a ton others. But the main ones that we look at are Tesla and Amazon, excuse me. Now, before I click on this one, who can tell me what are the main comm sector stocks? You guys are in my streams. You guys always hear me calling them out. It's kind of a cheat question because some of them are on the screen already. But what are the main weights of the communication services sector? You guys hear me mention these every single week. What's up, Sonny? Glad to see you, man. Sorry I was so late on your Instagram DMs, man. I really don't open that app. Best app to get to me on is Discord, to be honest. But I do apologize. I remember you. But yeah, who can tell me what are the top weights of the communication services sector? That's XLC. Nope. Sand dollar, that's discretionary. That's XLY. We're talking about XLC. What are the top weights of XLC? Gorov said Meta. Teresa said Google. Gorov said Google again, or Google on top of that. Sanddollar said, oops, the D's. No, it's okay if you guys don't remember. This is good if you. It's okay if you don't remember. This is the point. This is my point. We need to remember these. We need to learn these. We need to write these down. So let's go to the communication services sector. These are the Meta, Google, Netflix sector. Google, Meta, Netflix. Remember, the only difference between these two is that one of them have voting rights, the other one does not. The main one I look at is GOOGL. But the main ones that we look at when we look at this sector are Netflix, Google, Meta. You also have Comcast, you have Disney, you have Verizon, T-Mobile, AT&T, sorry. Then you have T-Mobile. Now, Sanddollar remembered. I think he just thought I was talking about XLY. I know Sanddollar knows his because I was like, when I saw him answer wrong, I was like, no way. Because I know he knows. We always mention them in chat. He's one of the people in chat that also update them because it's very important to know that SPY is a big pie. These are the slices, and within those slices, where are the ingredients? These are what makes up that slice. Apple, Microsoft. What makes up the healthcare slice? UNH, J&J, Eli Lilly. What makes up the bank slice? Berkshire and JPM for the most part. What makes up XLY? Amazon and Tesla for the most part. What makes up XLC? Google, Meta, Netflix for the most part. You know, in every sector, of course, there's those ingredients, but I just want to make sure you guys understand that before we move on. All right, so we finished XLK. We're doing healthcare now. So we're gonna get our emerging candles in the monthly. Again, if you're just not tuning in and you just care about SPY, just go back to the beginning of the stream. We finished that. We're moving on to the sectors now. But if you're just interested in SPY, you can go ahead and just go back and review that. Oh, my bad. We're supposed to do halfway points. You got to be consistent. If I'm going to do it on XLK, I need to do it on this chart. Everything needs to be the same. These give me consistent variables, so I'm not trading against random information every week that is different. You want to trade off the same information. That doesn't need it, that doesn't need it, that needs it. You can see I don't really care about getting exactly to the cent. You just want to get close. But if you want to get exact to the cent, you totally can. You can just right-click the fib, edit properties, see what number it says for the halfway point, or you can just look at your screen. It should say it. And then type that in or draw the level, then type it in on the level, and you can fix it straight to whatever you need it to be. So if you do like to be tedious, you can still do that. Alright, so we're going to add the... Whoops, it zoomed in pretty heavily. So we're going to add in the previous day high. Oh, pretty close. Go down to that open, which gives us, of course, the area of supply for previous day high. We're going to go from the low to the top of the last red candle before the reversal, which would be this one, but I'm just going to include both. And this should give us an area of demand from previous day low. So now we have extra levels to go off of. And if you want to add another halfway point here, you totally could. I'm just going to leave it there. I like to have it with minimal information because it just leaves the charts very clean. Moving on to banks. Wait a minute. I have to start from here. Alright. Get that level. Again, these are all emerging candles. We haven't drawn anything crazy yet. Whoops, that's not an emerging candle. Zoom out. Move on over to the right side of the chart. New highs have been made. New emerging candles are here. That says 38.37. That says 38.40. So that's a little higher. So that's an emerging candle. And then I see a couple areas we could draw halfway points. That being one of them. To make it easier, by the way, zooming in helps. I always like to make it hard on myself. 33.18. Remove. And you can see it's just a set standard of drawing. I'm not really ever doing anything weird. I'm always drawing emerging candles or halfway points. It's never some random level, you know, made up just to look good for you. I didn't sit here for 3 hours practicing a chart to make things look good, ready for you. I can just wake up or get up late, or I can randomly go enjoy the rest of my day and then come back and chart things the exact same way I did earlier. You know, I don't have to sit here and practice for 3-4 hours and try to accommodate a chart to look good for you. You know, and that's the whole point of this system, is that too many people have a system where it's just bullshit, where it's just things to look good for you. It's not actually helpful information. If you go to most videos on YouTube, actually, you just type in how to chart. Most people will give you this bullshit explanation of like, so basically you look over here where there's a wick and there's a good kind of hold of support. You can it's good point of view here, and then you can see it rejected 1, 2, 3, 4, 5, 6. That's a great area of support turning into resistance. It's like, no shit, dude, but how could you accurately draw that over and over and over and over and over again without giving me this bullshit explanation of, oh, there's a support or resistance here, so you want to draw in this general area. That's not a set rule. That's not a set consistent variable. That's inconsistent as hell, and it almost pisses me off. So you need to have a consistent variable when you're looking through charts, when you're looking through this stuff. Don't just draw random junk. Did we draw everything? I was ranting, so I already forgot. Yeah, we drew all our halfway points. Let's go to the... Where am I at? 5 minute. Previous day low. I'm going to just include the previous day open. You're supposed to draw up to this high right here because that's the last red candle before the reversal. But I want to include the previous day open. Previous day high. This wasn't where the reversal came from, though. That's just the high. The reversal came from here. So we're going to go draw from that candle. And it almost includes the previous day close. So we're going to have to draw that again. 34.92. But that's everything for XLF now. Now we can look over those highs. We can look for them to stay in this range, look for them to break support. If they hold over the previous day highs, we know they're trying to have more bullish control. So it's just good directional levels that we're looking at. And that's, again, why I have such minimal information. I'm not drawing a million levels on my screen. Well, it looks like it, but we're not. Emerging candle, emerging candle, emerging candle, emerging candle. Another emerging candle. Another emerging candle. Uh, 192.40. That's actually kind of off. Let's draw that. Okay. Remove. And let's see. Do we need to draw some halfway points anywhere? Yes, we do. Pretty much everywhere. Again, if you guys are just now tuning in, be sure to drop a like on the stream. Go to the back of the beginning of the stream if you want to get a review of SPY on everything, basically everything SPY, but bigger, smaller time frame, thinking process for up and down, every direction. I don't sit here and just cover, am I bullish or bearish? I sit here and cover everything, because there's no point in being just bullish or bearish. It's ignorant. You're almost screwing yourself by being just one-sided. Oh, we already got that one. I'm blind. Alright, so go to the 5-minute. Go to the Friday price action. We'll go from the low of day to the last high of the last red candle before the reversal, which would be there. We'll include that day's open. Go to the day's high. We'll include the green candle before the reversal, which was actually here, not down here. And then previous day closes right here, so we need to include that. It looks kind of ugly, but we have to include it. So now we have everything set for discretionary. And then, by the way, guys, outside of looking at this exact chart, when we're looking at this, let's say XOK is breaking this resistance, holds over, then pushes off. What does that mean happen for the weights of that? That means most likely between Apple, Microsoft, and Nvidia, most likely between those three, whether it was these three or the rest of the tech sector, they probably broke out over whatever near resistance they had. So Nvidia's case, it'd be right here. They broke over that, and then they held it as support, then they moved off of it, right? That's what that would look like. Go to Microsoft, what would that look like here? They would have gotten over their previous day close, previous day highs, held it as support, moved off of it. What would it look like for Apple? They'd probably have held this range that we have drawn here. What chart is this? Okay, default. Got over the previous day close, previous day highs, held it as support, moved off of it. That's what that would look like for the XOK chart. Does that necessarily mean SPY is doing that? No. Most likely it is, but because that's, again, over a 1/4% of SPY. It's the largest sector in the market. But what would that tell us about the rest of the sectors if SPY isn't doing that? Something's keeping tech down. So it's just good to kind of keep that in mind. In my head, I always like to draw this like line. I'll draw like this line just to kind of give you a good visualization. But I'll draw this line. I'll draw my two little X's on each side because it's an endpoint. Basically, nothing gets past these. But I think of this as like 0 and like 100. I think of this as like the floor. I think of this as like the moon. So when I see these sectors and I'm going through them really quickly, I try to imagine on this scale, where do I see them? So let's say comms and discretionary are just for some reason just falling through the floor. Then I'll put them here on this chart. I'll put them way down here. And then let's say I look at banks and healthcare and I see them way up here. They're both just killing it for some reason. Well, that almost nulls the fact that this is down. SPY at this moment, without looking at tech yet, SPY at the moment isn't doing anything because 2 of them are down, 2 of them are up, right? And it might be even slightly more up because one of these ups are healthcare, which is the largest out of these. It's the second largest. Tech, let's say tech is just having an day. They're just slightly green. What does that mean for SPY knowing that? SPY is most likely slightly green because 2 of the largest sectors are up. One of them's not killing it, but both of them are up. Another side sector is up out of the top 5. It's actually the 3rd largest. And then you go to the other 2, and they're down at support or they're breaking support, and they're dumping. So SPY in my head is slightly green. That's how you should think about that. Perfectly 10. Let's go. All right, so go to monthly. Charting the last sector, and then we'll go over the economic calendar. I think I said that in the wrong order earlier. We'll look at the economic calendar, the earnings calendar, and everything happening this week, news, all the good stuff, and then we'll end the stream there. Or no, we can go over some tickers if you guys want. But I need to speed through what I'm trying to go through so everybody can review this without it being too long or too annoying. So fib, we'll go from candle to candle, grab our price level, grab the halfway. Whoops. Do another halfway. Actually, I don't have to do that one. And this is, if you guys, again, are in the Discord, you guys have seen this sector information very heavily because it's talked about very heavily in our most popular channel in the Discord, Reason Over Risk. This is a channel where me, Daffy, Leland, 2 of my good friends, Tin Man's in there now too, posting spreads. D-Touch is in there, but he's getting warmed up before he posts more. But basically, a lot of my favorite traders in the chat all in one channel, posting their ideas, examples, breakdowns, their own trades, all kinds of stuff. So it's just a really awesome channel. But what I was going to say is if you do have access to that, you have been aware of the sector information for a bit now. Just make sure you go through that. At the demand of previous day low. Actually, we're going to include this level here and go to that level. So this would be our area of supply. This would be our area of demand. And then you can extend these areas over by editing properties, clicking this plus sign a couple times, clicking OK, and then you have it ready for the next day. That's actually the cleanest one out of every sector. They even have that previous day close right in the smack dab middle of that range. But those are our sector charts. Give me a thumbs up if you guys understood a lot of that. If it resonated or something. Sectors are seriously everything. This is the greatest way to visualize what's going to happen on SPY as it's happening. Sometimes you'll even pick up intuition a little bit and you'll have a better feeling of what's going to happen before it happens, but that's really all you'll have is intuition. But facts of the chart, you're going to be pretty much up to date with SPY every second, but just by looking at the majority of its sectors, you know, and there's going to be days where healthcare and tech are both dumping, but SPY isn't dumping, and that's going to confuse a lot of people. That would mean small caps and a majority of the rest of the S&P are holding support or even rallying. So, and we've seen that a couple times across the year. So any weird combination you could think of with the sectors, it's possible. Sunday thumbs up. I appreciate that. Nice way to visualize the sectors and the SPY. Thanks, no problem. It's just a good kind of way to keep it in your head, because it can be very confusing and overwhelming when you're looking at 5 different charts. You know, because in your head at first when you look at this, you're like, wait, you want me to look at 5 charts to better understand one? You know, it's crazy at first, but then it starts to make more sense the more you look at that, because it's not just 5 more charts. You know, in each of these, you have 2, 3, 4 stocks that weigh the most in them, you know, so you're actually looking at like 10, 15 stocks, 5 sectors, and SPY, and you're still not getting the whole picture. You're just getting a majority of the picture. When I teach that, you're still only getting 60%, 70% of SPY. I'm still not even showing you 20, 30, 40%, the leftovers, you know, which is still very important, but I like to show you the majority. So let me get this pulled up real quick. And then we will go over what's all going on this week. So I need to pull that up. I need to pull this up. I need to pull this up. And I need to pull... Oh, wait. I forgot I found a way better earnings thing, by the way, guys. Let me go find it. Alright, so first off, let me pull these tabs over. So I always promote this website even though I'm not a paid sponsor, just because I love that website. Briefing.com, this is seriously the greatest website ever. I love the fact that I don't have to sign in. I can just type in briefing.com, and no, you're not going to have an update every 20, 30 minutes. I think it's like every 40 minutes or every 30 minutes or something. But it gives you good updates on what's actually happening with the market. There's not opinions, it just tells you facts. And then what's moving the market, facts. We're not giving you opinions, what sectors are strong. And this is kind of how we look at the market. You know, what's moving it and in what sectors are up and down. And that's great. So it's a really awesome website to look at. I'm trying to find this earnings calendar website that I found. It's a lot better than Earnings Whispers. Don't tell them that, though. Oh, here we go. I found it. Let's go. Oh, yeah. Y'all are going to freak out when you see how clean this is. All right, so we'll get to that. So, briefing.com, this is a great website. We'll check it out every now and then during the day if you have time. I always just like to leave it on an extra tab when I'm streaming or when I'm looking at charts by myself or with somebody. I just kind of have it on another tab. It's a great website to use. I don't know who made this. I need to probably start to investigate that. But beautiful website. I've used it for a while now, probably close to a year. I don't know if it's been a year yet, but close to a year. This is a great website, financialjuice.com, that you also don't have to have a payment plan or anything. You can just have it. You can customize your news, customize what news you're looking at. You can see I'm Reliub. But this is a great news feed right here, because if you scroll down, if you click this little thing right here, you can set what countries you want. I just leave it on United States, and then I leave the high, medium, and low importance settings on. Close it. And then I know what is happening. So I can already see what's happening for the rest of the year. You know, I can already see where a lot of the holidays and a lot of the big stuff, I can see where Jackson Hole is starting. Again, before we move forward, guys, pretty much no news from right now till Jackson Hole really matters. You know, it does matter. Some of it will maybe even change some opinions short term, but nothing matters until August 23rd through the 25th. So you can expect a lot of maybe lower volume days, more indecisive price action until we get to this point in time. If you guys want a review of how this happened last year, this is where I made probably one of my best swing trades on Apple and SPY. But if you go back to the last time this happened, is it this one? Yeah, it's right here. Last time Jackson Hole happened, we had Fed talks, Jerome Powell, and then you had Jackson Hole, and then this is where we took our dip from. Will this happen again? We don't know. I personally don't think so. Not to this extent, at least, because this literally made new recent lows. We had recent lows at 360s at that time. All that stuff happened. We ended up going down to 349. Ever since then, we've based, made higher lows, consolidated more, built more higher lows, moved up through 380s, moved up through 400s. We've even made it all the way up to 460s now. It's been a pretty crazy journey this year. So will this happen again? You can already see we've already started representing part of what Jackson Hole looked like the first time. So I'm not saying this is what's going to happen. I'm just saying from this move, if we get a lower high again, that could represent what happened the first time. Will we make new lows? I don't know. But I'm just letting you know that we are at a spot of the chart that would make sense for a Jackson Hole type move like last year to happen. But again, we are at a different part of the economy, though. We're not at the same seat we were a year ago. So there's a chance that we're not going to see that. There could be a chance you end up just getting indecisive price action into the event, and then we rally. So I'm not going to sit here and tell you a bearish or bullish bias. Both scenarios are equally as possible. It's 50-50 on that. So just know that a lot more indecisive price action, lower volume, harder to trade market could be right in front of us right now, just because we just finished earnings season. Feds are basically done talking until we see more Jackson Hole. So be very patient on what's going to be happening for that. Sorry, somebody's messaging me. So let me see what y'all are saying before I move on more. So let me go back to briefing.com. Or Financial Juice is a great website. Again, you could use this. And then we'll go into the economic calendar. We'll go into the earnings calendar and all that stuff. But some of the economic information is here. You can see, let me scroll back up. You can see tomorrow, not really anything, very low importance. You can see the next day we have retail sales, which is pretty important. Month-over-month data has been very, very important. Some year-over-year important has been, but pretty much besides that, nothing else the rest of that day. You can see August 16th, just a couple small things, and then at the end of the day we have FOMC. Next day you have jobless claims, and then the rest of the week you have pretty much nothing. And then the week after that you have Jackson Hole. So this week, small stuff that's not going to be as important. Next week, going to be very important. Yes, we can chart Twilio after. Jackson Hole, basically a lot of speakers. So Jackson Hole, let me just read you the review that I sent out to everyone. The 2023 Economic Policy Symposium. It's structural shifts in the global economy, and it will be held between August 24th and August 26th. To foster the open discussion that the symposium is known for, attendees are selected based on each year's topic with consideration for diversity in region, background, and industry. So it's not just Fed speakers. These are people of importance all around the world that are going to be speaking here, just like last year. So big dogs. A lot of people's opinions will be swayed at this meeting. This is what a lot of people are saying we're going to be going off of. So very important. But next thing, economic calendar. If you guys want to go to econoday.com, go to view full calendar. Sorry, speaking English is very hard. Basically, the things you need to focus on the most are the red stars. These are the ones you want to focus on. You can see we just went over this retail sales, FOMC. Next day you had jobless claims, and then after that you really had nothing else. And then, of course, the next week we have Jackson Hole. But here's the earnings calendar. This is the amazing free website you can use. I'll drop you guys a link in the Discord. I don't think I can send it on YouTube for some weird reason. But again, guys, I hope you guys enjoy the breakdown with Jackson Hole, a lot of the news for the upcoming 2 weeks. So again, I just kind of gave you a breakdown for the next 2 weeks, not even really just this week, because I don't want you guys to think that this information is just good for the next 3, 4, 5 days. This is probably good for the next 2, 3, 4 weeks. But here's the earnings calendar. Again, you can see not as many big names as before, but still some recognizable names. And I like this website a lot more than Earnings Whispers because it doesn't glitch as much, it doesn't lag as much, and it's very easy to look at. I instantly know what I'm looking at. Earnings Whispers just now updated their website. It's been years, so it's crazy. But I like this website a lot more. But again, briefing.com, financialjuice.com, econoday.com, and then savvytrader.com/earnings. And then, of course, we went over everything. SPY, we went over the sectors, we went over what to look for bigger and smaller time frame. Now, we can finally relax and chill and jump into doing just whatever charts you guys want to go over. But please drop me a like. Let me know what you thought of my breakdowns, what you thought of the feedback that I gave you on the markets, what to look forward to for both bull and bearish bias. Again, I'm not going to sit here and just cover one side of the story. That would be pretty stupid. But if you guys did miss it or you're just now tuning in, go back to the beginning of the stream. Catch everything we're talking about. Right now, we're about to just jump into a couple tickers and have some fun. Oh, nice, Julian. No, Marlon, I would not want to go to that. What's up, Dividend Bull? I saw Julian say meta. Which I actually have meta charted, Julian. Again, guys, if you have access to the Discord, do not ignore my post. Go over to the Reason Over Risk channel. I'll show you where it is now. Go to the channel, Reason Over Risk. And I didn't send it today because we're doing the stream today, so I don't need to send it out. But every so often, most weekends, I will send out a lot of chart links. Those are good forever. You don't have to keep updating them. If you want to go practice, do that on your own. But if you're going to get the levels from me, damn, where did I post this? Oh, here it is. But not every it's been a few days. But some weeks though, I post these and they're good forever. You know, some of the smaller time frame levels, you know, like the zones from the intraday, that can be updated. But these are good for forever. You know, the bigger time frame levels, and Meta is one of them that I always post because Meta moves a lot. Netflix, Tesla, these move a lot. AMD, SPY, these are ones that I always love to post because they move a lot and the premiums aren't super crazy. But just make sure if you do have access to the Discord that you are taking advantage of those links, because I have been sending those out pretty heavily. But we can do Meta. We can do Twilio. What's up, Charlie? We can do Chewy. Yo, Daffy, you got the yellow star. We got a few yellow stars in here now. Look at that. That's looking good. Yellow star gang. All right, so let's start on Twilio because I think he's been saying it the most, which we actually already charted Twilio, so I think I'm just going to give you a breakdown of what I did because we just did this, I think, like last week or the week before because somebody else requested. It might even have been you, and I just don't need to update the levels. But basically, I drew monthly emerging candles. I drew all that fun stuff, which actually the monthly looks super bullish. I hate to say it. It's got that dip to it, that slow down again, higher lows been built, and possibly a bull flag as long as they hold between 53 and whatever this is, 53 and 62.50s. That could be a very, very good sign for them. But the monthly shaping up. Let's go to the weekly. Of course, the month is not even halfway over, but still nice to look at that. But even though the weekly, though, look at that. You got a base build, a rally, you got another higher low, which this is the better higher low to look for, and now an almost bull flag type look to it. I hate to say it, guys, but Twilio actually looks super bullish. Just based on that, and I don't like calling things flags, but just for a vague term, you do have a bullish continuation pattern popping up here regardless of what you're looking at. But what is a consistent rule that we can do to get this? You can go from the low of that move to the high of that move, and essentially, as long as they're holding the 65% to 50% of that fib, this should be bullish. If it breaks both of those, then it's most likely wanting to return to either produce another higher low or to build a base, or to make new lows. We don't know at that time. We can't see the future. But that is what you could look at moving forward, whoever wanted to look at Twilio. So if you like Twilio, this looks really good as long as it's holding 58 short term. If you see it dip down, 54 could be retested. If 54 breaks, you could be seeing lower retest. But based on how I chart, that looks really good, honestly. That was a quick one. I don't really have to look at it that long. But that's a beautiful looking chart. I might have to look at that more this week myself. Looks really, really good. Daily time frame. Kind of hard to look at, though. I'm not going to lie. But again, keep that weekly fib drawn that I just showed you. Go from the low of the move, go up to the high of the move, look to see if that fib continues to hold. Play off of facts of the chart, not off of your emotions. Meta was said right after, so we'll do Meta. So Meta, I already have drawn out on the smaller time frames and the bigger time frames. Basically just using that same system, getting my emergent candles, getting halfway points again from the far left of the chart on the daily time frame. That's all I really need. Moving into tomorrow, though, I do need to go to the high of this move, to this candle here, or to that level there, sorry. Draw that area there, add a couple days, and now I have my area of supply. Draw that move there. Top of the last red candle before the reversal, that would be here. Draw my little blue rectangle to make it easier to see. Add a couple plus signs, hit OK. Add my previous day open, add my previous day close. And that's everything we need for Meta. I might be able to cheat and add a halfway point here. I see I have a lot of room here. Looks like 306 would be a good target if this area breaks, but damn, Meta is probably going to make it to my watch list tomorrow, so don't worry about that one. SPY, Meta. Let's do AMD real quick so I can get a couple ready for my list tomorrow. I probably should have done this before saying let's do charts. So we'll go from high of that day, open the last green candle. Low of the day, top of the last red candle. I can't draw worth a damn today. There we go. Come on. And then the previous day close. And that's everything we need. Of course, we don't have pre-market high, pre-market low yet, but AMD is definitely making it on my list tomorrow. Oops. Apple, Microsoft, Nvidia. All right, what other charts did y'all say? We got Twilio, we got Meta. Sandollar said Chewy. Let's look at Chewy. Sandollar, would you like bigger or smaller time frame? Make sure you guys are saying what time frame too. If you just say the ticker, it's kind of impossible for me to figure out what you want, because then it's going to make me cover both bigger and smaller time frames. So make the request. Do you want bigger or smaller time frame? Probably should have made that more clear. It's my fault. Bigger, please. Okay, I figured, because bigger is a lot more fun. Bigger time frame is a lot more fun to look at than smaller. So this one is pretty nice looking, actually. It's another chart that's near its base. So I instantly lock my eyes onto the low of this chart, onto this base, basically where the last meet of a low was. So between that area, I know there's a strong area of support. I know there's a lot of, not emerging candles right here until this point. So it kind of makes it uneasy to see over here. Oops. Let me get these, though, just in case. Oops. That's not an emerging candle. And then I kind of isolate everything that wasn't adjusted to Sandollar and anybody watching. So I see my emerging candles don't start here, but my base is way down here. So I have almost an unwarranted area of price action right here. I don't know what's going on there. So let's zoom in on it. What happened here? So we had price hold support, push off support, try to build a three bar looking type of play. Didn't quite turn it into a 3-bar play. 4-bar play ends up setting up. So I'm going to actually use these as emerging candles, even though they're not. But that's where they held as support. So I'm going to draw that low as well. Go down to the weekly. Again, I'm focused on the far left of that chart. I see the low of the move is here before the reversal. It's here. Edit properties, rectangle. Add it to 2025 because we're lazy and don't want to adjust it to the current day's price action. Go down to the daily, zoom in, and now you can start to do your analysis. That was just getting the chart set up, but this actually looks not that bad. So instantly my eyes lock onto this candle here because these 2 days have traded inside of it. Basically, whoops, basically you're looking for a breakout of this candle, any kind of close. Excuse me. Any move outside of 3160 into this area can be a very good show of support that they do want to try and react to this and try to build up to this. They would probably react to this first, I hate to say, of recent price action because it's a closer term eve before making it the top of that area. So if you do see a move outside of that, that's most likely where they're going. Give a gap fill there. If they break 3040s, you have 2960 and 29 underneath. So pretty good example of what to look for based on an outside bar, or sorry, inside bars. You have an outside bar, inside again. So now it's almost like you're in that scenario twice, but you don't have to draw those two for that one. So I would focus on that. It looks like it's still stuck in a bigger gap here. Let's see, where does that end? 30. Okay, so never mind. Don't aim for 2960. If that breaks, aim for 30, then 2960, then 29. Honestly though, if you want to, I would probably be better looking for a base build here if it doesn't make new lows under here, because essentially risk reward wise, you're not at a part of the chart where you should be looking for more bearish candles. You're at a part of the chart where you should be looking for base building and upward pressure unless new lows are made. So I would be focused on that. But Chewy, not a bad looking chart. Yeah, stuck, like you said. Daffy said Ulta and Roku, which I looked at Roku, so we can look at that again. I think we already did this as well. Yeah. So they filled their gap, came back down, got a good rejection off of a potential lower high here. If they maintain rejection of 451 to, it's funny because the rejection on SPY right now that I'm looking at is 450 to 451.50. That's essentially what you could look at here for Ulta is 450 to 451.50. But it looks like they've already started their lower move down and got a good lower close. That's a very good sign. So let's take the low of this move to the high of this move. Essentially, it's already made the good close under. So most likely moving down to 440.50 early morning tomorrow, if they do not have a higher open, of course, retaking 444, 444.78. But if they do lose this support, you could see 440.50 if you see 440.50 break. I'd look to see if they test this day's open, and then you can see if they want to go test this low and the recent low for Ulta here. But that doesn't look too bad. Good find by Daffy. And then he said Roku, which Roku I liked a lot. We were just charting this in chat. But of the recent move, I think I did this on the weekly. Yeah, of the recent breakout, they made it to this high and are back to the perfect part of the chart. Just like Ulta already breaking the support, but this one's already made it down to the golden pocket. So it's in a kind of a step forward than Ulta. If this wants to, it needs to break 77.20s to move lower. But if it can try to hold support, build some base. You might not get a breakout this week on this. You might get some base building on it, but at least that gives you a good setup moving forward. So you might have to be patient. It might get a little bit annoying having to watch it for so long, but at least you know you're following the story of the chart in real time. But good find by Daffy. Those are both really, really good setups. Coin was one that I was just going over with chat on the daily with this. But we were looking for these to hold. We ended up getting into a position. I ended up taking small profits. I think the first day I took 15% on 2 of the 3 contracts. The next day I took like 5%. I didn't make anything on the next day. I don't even remember what day it was. I think it was this day to this day. Nothing special. But didn't get a good hold of support, basically. They reacted to it once, have already broken support now, and you can see this is what it looks like to lose golden pocket. It's not always going to be the cleanest move, because you have to understand, you have people who think the dip is getting bought still, because not everybody draws fibs from the right areas. Some people draw them from areas that don't help them at all. What we draw them from help you. So when you look at this, you're seeing a transfer of power where it's bears taking over. This is a bull trap, so you have people getting trapped, people like me. Then you have a reaction down, breaking support. But look how ugly it was. Like, yeah, they lost support and got down to the next area. Yeah, I could sit here and say, yeah, guys, it broke 95, and I told you it'd make it down to 85 and possibly down to 78 or even 80. I told you guys this. But I can't sit here and tell you that because it's a very ugly reaction. But this is a very good example of what it's like to lose support, to see the exchange of power. It's not always going to be the cleanest. It's not going to be cleanest. So good looks on Ulta and Roku by Daffy. Ratch is sitting here talking about Apple. He said Apple is above a gap on the daily / weekly. Possible gap fill if we fail to hold past week's lows. So he's going to give himself a good view. He knows we're in a bigger gap, so he's just going to give himself the passive view. I like that a lot. Looking at this week's lows. Perfect job. He knows that the risk reward is possibly showing us that we're going to get some upside, but he knows what to look for if we do get more downside. I like that a lot. Good job, Ratch, planning for both sides. Yes, Marlon, we can do Baba next. So I think I have some just short-term price action, and that's another thing, guys. If you guys ever find a chart, Baba's a great example. One that doesn't use emerging candles. Just go from the recent low and then work those recent emerging candles. It's okay. You don't have to sit there and draw price history every time. Not every chart's going to have that. Baba is a great example. So make it easier for yourself. Let's see. Do I need to fix this? No. So smaller time frames. Damn, we might have to add Baba to the watch list tomorrow. Let's go ahead and add it there. Did we like any of the other ones for watch list? NVIDIA. That'll probably make the watch list because I'm addicted to NVIDIA. Well, somebody remind me to come back to check Tesla after we do. What ticker was I just on? Baba. Somebody remind me to go to Tesla after Baba. So I'm gonna go from that level there to that level there. Demand. Supply. We got the open, we got the close. So yeah, Baba's probably making it to the watch list tomorrow. That looks really good. What I like about it is that it is inside of the previous day with good breakout levels close by and good targets of the previous day close by, which again, that just kind of gives you a good tempo too. So I know that if it breaks out above previous day close, makes it to here, slows down, then brings it back down to here, that it is most likely going to go down to previous day close because it didn't show any strength breaking out. It just wanted to stay in range, right? So it is most likely coming back down. Whereas if it broke out first, then came back down, it doesn't have to come all the way back down to here. It could just want to come back down to here and then move higher. It doesn't have to come back down super far. So yeah, Baba, we're probably going to have that on the watch list tomorrow. Good looks. Let's see, how did I chart this? Okay, so I did the usual method. I didn't draw any monthly emerging candles because it's Baba, of course. But I did weekly supply and demand. So that's where all my price action is coming from. And just from a quick weekly sneak peek at this chart, I can see it is holding a really good multiple lows here. From this breakout here. They broke out, held over, built a higher low from holding over multiple times above 77.80s it looks like, which I must have drawn that from the daily. But they made a low, a good higher low, which again, tell the story of the chart. What happened? They pushed up, they made their breakout, that's where they made their slowdown. Looks like they tried to break down, ended up making a higher open that next following week, did keep control of the golden pocket and control point, made a good move up. That gave them good probability of making it back to the recent high. They ended up making another inside candle, broke out again, and now they're seeing, kind of like in this scenario, can they hold over this level? So we're going to be going off of those recent highs there. So let's go from the low to the high of the move before the slowdown. So essentially, and if you want to draw this in a different color, be my guest. Essentially, as long as they hold 92.57, 89.59, 89.59, then that is an area where we can look at for a potential area of support for bullish moves to hold off of, to build back to the top of this move, just like we saw from here. From 1 week to the next, they made it to the top of the range. It took 2 weeks, actually. So maybe over the course of the next 2 weeks, as long as these two areas hold, you should make it back to 100, 250, maybe even just 100 flat. If not, then you should see a test of this area and a possible break lower. So that could be a really good game plan moving on the week for Baba. Good looks, who said that one? That was Marlon. Good looks. Oh yeah, Tesla. All right, so I think that this will be my last chart, and then we'll end it here. I didn't want to have a super long stream, so it's at least watchable for people to go back on. Plus, so people have time to look back at this the rest of today, because this is supposed to be my weekly scenarios video for everybody. But let's do Tesla, and then we'll end it there. We'll see a couple other ones to see if I think they're worthy of making it to the watch list tomorrow. But yeah, let's clean this up. Whoops. 5 minutes. Why do I have this big blue area? Is this a gap? This has to be a gap. Okay, it is. I was about to say. So we got really close to filling that gap. Let me get back down to the 5 minute. I'm going to remove that. I don't ever really do that. I think I was just curious Friday. Alright. So the high of the move before the reversal back down. Green candle. That's area of supply that we need to watch out. So basically from that high and include this level here. Add a couple days. Price level, low of the day to the top of the last red candle before the reversal back up. That would be right there. Pretty wide, but looks good to me. Edit properties, add a couple days to it. Okay. And then make sure your open and close are accounted for. So I know my close is right here. And my open is right here. So pretty ugly, but they're there. So moving into tomorrow, I could look over previous day high supply towards 245, above 245 for more. I could look under 241.70s. Of course, that probably will break before then. We'll see if they can break previous day demand, Friday demand. If they can break previous demand, retest off of previous day demand, that'll be very clean for bearish moves. If they end up holding this, you can look for a base build and look for moves back up to 241.70, 242.65, possibly even the previous day supply. But yeah, Tesla is definitely making it to the watch list. for tomorrow. Let's see if Meta or Google, if Netflix makes it. I've been loving adding Netflix to the watch list because even though it might not move every day, when it does, it moves a crazy amount. So I love having it in there. Yeah, sure, Tobias. Go ahead. You want to hear my lotto story before you go? No problem, Marlon. I'm glad to be here, man. Glad to have the community. But I hope the stream was helpful before I get into Tobias' story here. I hope you guys go and check out a lot of the TA that we covered from SPY bigger to smaller time frames, some of the sector information. I didn't just chart and talk about charts. I also broke down a lot of psychology behind a couple things on how golden pockets work, on how what you're really seeing when you're seeing the tests of those, and why some of the price action might not be as clean to you. It might not be as easy to see. But there are reasons why. So I would definitely go back through today's stream a couple times if you can. Oh, you're looking for a house. That's why I'm a bit less active trading. Hey, totally fine, man. Good luck finding a house, but good luck. So we needed to talk to the bank, and the first one said they wanted to see more collateral. Oh, that's great. More collateral. They don't already have enough. Don't give them a trading account balance then. Give them the money. Yes, it was very helpful as always. Lots of good information and very good way to prep for next week as a community. Thank you. No problem, Sonia. Thank you for tuning in. I appreciate the feedback. So my girl has been bugging the F out of me. Tobias is in the happy wife, happy life scenario right now. And I pulled my full long port out on Monday. Oh, that's... if you're going to do it at any point, I guess now wouldn't be the worst. It would suck to see market make new highs off of this, but at least you're at this part of the chart compared to down here when you're having to make this decision, it's all your decisions. No one's making them for you. I was just saying. But thank you guys. Thank you, Dan. Thank you, everybody. Thank you, Marlon. Thank you, Dividend. Thank you, everybody who tuned in. Be sure to drop a like on the stream, and be sure to share this around to anybody who might need a good update for the week. I like to give non-biased views of the market. I cover both sides. I cover consistent levels, consistent variables. We don't go over stuff that moves around us all the time. But I'll see you guys later on. I, again, thank you all for being here, supporting the community, supporting the channel. Oh my god. That is a horror story. I don't even want to look at that anymore, Tobias. That hurts me, and it wasn't even me. But I'll see you guys later on. Again, thank you all. Love you all. And I'll catch you in the Discords and the streams this week.